Clem Chambers, a senior contributor to Forbes, was one of the first people to predict inflation recently. After the COVID crash, the general consensus was that the world was in deflation as an economic crisis was cause a collapse in demand. That proved to be true. That started a vicious cycle of falling prices. Chambers thinks that at best, we will get at least 50% inflation in the next 3 to 5 years. And it could be 100%. If the central banks and politicians make a mess of it, there could be more, a lot more, with the possibility of 100% inflation down the pipe. Now it appears the consensus is predicting a flush of inflation after the COVID crisis dies down. So the general opinion has gone from deflation to no inflation to a burst of inflation in about 9 months. Considering the impact of all the monetary dials going haywire, I think we might be actually in for a very large amount of inflation already baked in, with room for monetary authorities to blow the roof off things and kind of go in a different direction. So this bodes well for any inflation hedge, and gold is obviously the classic one. So where's the gold price? Gold had a great run end of last year, and it looked to hit a huge vertical rally, and it did not. Some say Bitcoin took over and enjoyed some of the vertical move of a safe haven investment, and it took some of the luster of gold away. There's some truth in that, and it's harder to pile into gold. If you're in a panic, you can load up on Bitcoin pretty easily, and a lot of people did that. However, gold has a lot of headwind, and it has a key use. Jewelry demand has been heavily hit by COVID, but I believe it's on the way back. Many claim that that's been gold's weakness, that the biggest industry is the jewelry market. So a lot of people have been favoring Bitcoin as a hedge. They think Bitcoin's gonna hit 80, 100,000. Chambers, however, thinks that the very same potential that could motivate people to turn to other hedges will help gold. He thinks gold is an obvious first stop on the road to hedging against the never-ending orgy of stimulus coming from all corners. It's about dollar cost averaging. Gold is in a bear, and it's highly likely to languish for maybe the next few months in the short term. As such, it could be strategic to get in. Gold is a long-term position, not a short-term play. Buying chunks of gold exposure over the next couple of months is a sensible way to play this, because there's sure to be a lot of distractions offering exciting returns elsewhere in the near term. Now it's time to play the sizzle, but also start stacking some money slowly but surely away into anything that looks like a cheap inflation hedge. For Chambers, Bitcoin might be, as legendary investor Paul Tudor Jones says, the fastest horse, but when it takes a rest, gold will have its long stride. So even though gold and Bitcoin seem to be moving in different directions, I think right now getting into some gold in the short term with inflation hitting in 8 to 9 months could really be a good hedge for everybody.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.